How's everybody doing? Really interesting times here. Really interesting times. And you know that's been the theme now for a couple weeks, and I'm not shooting any gas up your rear ends. Few things I'm watching really, really closely here, just to try to get a better handle on the timing of it all. And hold on, I want to get a chart of something else just to show you guys. Hold on. Yeah, and that's why Ave's making a good point out there. That's the whole my whole goal of these webinars. As a lot of you know, yeah, I don't try to teach anybody how to trade or how to do anything. My job, I feel like the reason I do these webinars, the reason why you would ever be a member to the Steam Room or private Twitter is for me to bring to your attention clues out of both flow and sentiment of things that may be happening before the regular eye can catch it. And that's the key thing. Like, the reason I follow sweeper activity, the reason why I pay attention to the positioning stuff and all that, yes, all right, fine, I enjoy it, I admit it, okay? But the reason why I have confidence in that stuff is because I know, right, based off my experience, how long I'm in this game, I know for a fact that there are players in this game who are privy to a lot better, quicker information than you and I will ever be capable of getting into our hands, okay? And, the only two things from my experience in real time that can provide us clues early enough to at least beat the riffraff to the punch is sweeper activity. And that's the beauty of sweeper activity. It's in real time. A lot of people look like insider buying, right? It's like when a CEO's buying stock and stuff like that. And that's all great. But a lot of that's delayed information, right? And still, people treat it as gold. The beauty of sweeper activity is it's happening in real time. All right. And just like insider buying or anything for that matter, not every single thing you see take place means something important or is actionable or is noteworthy in itself, right? But there are enough times when you put the pieces of the puzzle together, right? When you take a step back and sift through a lot of the noise, which has to be done right now, right? You can push aside a lot of the noise and a lot of the confusion. There are signals that are coming out of the sweeper flow on a day-to-day basis in real time, okay? And for me, one of the strongest signals are when the sweeper activity confirms something I'm looking for based off sentiment positioning, right? When the sweepers confirm that, that's the best case scenario, okay? Because a lot of times what happens, I won't get confirmation out of sweeper activity, or I won't get as strong as a signal out of sweeper activity. And that's the difficult part for me, okay? That's the difficult part for me. But when there are strong signals, or legitimate signals, okay, and that doesn't necessarily mean that trade is guaranteed to work. I know a lot of you guys know that, but for a lot of the new traders out there, they think when things line up in this game, that means it automatically equates to a slam dunk. That's not what it means, okay? But it bumps up the odds and increases the probability of it working dramatically. All right. And if you can stick to primarily that throughout your career playing this game, you know, you're going to be successful. That's what it comes down to. So, and here's the thing too, the big picture stuff, right, that we're talking about, like the rotation we've been talking about for a couple of, we've been talking about for a while, but starting to see signals, strong signs of that for, I don't know, the past month or past couple of weeks, right? This is big picture stuff. Like, this is a big development, right? All of us, we trade on a short-term basis, intraday, short-term swing trades, off technicals, off flow lining up with technicals, of whatever it may be, right? What we've been talking about, what we're trying to keep our eyes open to, is something major where you can have some confidence in building a position, having the odds in your favor, and more importantly, allowing it to turn into a decent sized winner. I think a lot of players, a lot of traders in this game, they don't get that, especially early on. The short-term trading stuff is great. I do it. I love it just as much, right? It's the action. That's not where the money is. All right? Don't let anybody fool you. That's not where the money is. You can see, you're going to see all around you, as long as you're in this game, people talking about how much money they made this trade, how much money they flipped this one for the next day. You never hear the losers. When the losers are combined with the winners, okay, if you're a decent trader, you're going to make some money. But that's not where the big hits are. Okay, and if you're okay with that, that's totally fine. I'm content with it a lot, especially when I don't have confidence in anything else. But when you're talking about and that's what everybody's allured to in this, that's the draw in this game. When you're talking about the favorable risk rewards on positions, stuff you buy and you can hang on to, and you have the confidence to hold on to it because the upside capability is there, that's the stuff that doesn't come around as often as you would like in this game. And that's why, it's important to pay attention to the major stuff while everything else is going on around you. And the other difficult part too of it is the big theme stuff, right? The larger signals out there, there's not that instant gratification. Okay? Very easily you can get into a couple things and they're not doing anything, and it's not that easy to continue to buy or continue to add or even sit in the trade, for crying out loud. I see a lot of people out there, they're in Jan Feb calls next year, and they're wondering why the stock is down 2 days after they bought it, right? So that all adds to the difficulty, and that's why the reward is favorable when it works out, right? That's why the reward is there. If it was easy, the reward wouldn't be there. All right. But that's where we are now. Okay. That's where we are now. And what's taking place right now, okay, aside from the major rotation we've been talking about, there's even a larger rotation at play. And this is what we discussed, last week and I think the week before. If that actually takes place, if that fear bubble that we've been talking about, what feels like forever, finally pops and money comes back into equities out of the bond game, out of the defensive game, you're going to see some things go nuts out there. Okay, it's a matter of when. That's the tough part, right? Eventually it's going to happen. It's a matter of when. So what we're making a bet on now, okay, and what we're trying to do, at least what I'm trying to do, and I know many of you are, okay, we're starting to see signs from the stuff that we follow on a day-to-day basis, okay? We're starting to at least see early signs that players, right, the smarter money out there is starting to aggressively position for it. All right, and what do I mean by that? we've been talking about the cyclical names, right? And that's the easy rotation everybody sees with their own two eyes. Okay. That was where, Caterpillar had an interest on the buy side, started pushing higher, seeing some flow, names like that. Okay. But there's a whole other market out there, right? There's a whole other bunch of sectors out there that are in the same boat. Okay. And when money comes out of that fear trade and starts looking at these stocks that have been demolished and how they survived, God only knows, right? We're talking about energy names that have been decimated, commodity names that can't catch a bid, right? And that's what I'm going to talk about today, the commodity trade, right? Commodities have been out of favor for good reason for a long, long time, a long, long time. The actual commodities, forget about the equities, even the actual commodities have been a disaster, okay? And we're starting to see signs out of the flow of money positioning in it. Now, why is that significant? Okay, the reason why it's significant, unlike other times we may see money starting to come into these groups, this is not the first time we've seen flow in energy or commodity names, all right? The reason I think it's pretty important now more than other times is that when can you say, right, that we are catching sweeper activity, right? So again, simple English, aggressive buying in the option market in a major portion, right? A major chunk of the stock market is catching action that nobody is in yet. Okay. And not only is nobody in yet, nobody has any exposure to, they're short out the eyeballs. Short out the eyeballs. Okay. So while these commodity names and all this stuff that we've been talking about, they've been going down in a straight line and nobody wants these stocks, right? What do you think was going on? What do you think algos and all these funds, how are they making money? What do you think? They could just buy the same stocks every day and make money off that? They short the living daylights out of these stocks, okay? And all these quants and trend following program syndicates have been doing exactly that for a long time now. What happens is if these things start to move against them, okay, and things take place where they not only, think about this, they have to not only take their short exposure down, they may eventually have to flip long on these things. Okay, we see the type of impact that has on the overall indices when that happens, right? That's what we look for on SPY and ES when markets correct. All right, so you can imagine what could happen in these subsectors when all these trend following algo programs, okay, there's no thinking involved. That's what I keep trying to stress to you guys. There's not somebody over there, you know what? We're not going to chase this. Yeah, this might be a fake rally. We're not chasing this commodity rally. Okay, there are levels already programmed that if a certain basket of names or an ETF or an index goes through a level on the upside, their short position has to come down from all in short to 60% short, right? As it continues to move against them, we go from 60% short to 30% short. Continues to move against them, they got to go from short to long, right? So that's what potentially is at play here, okay? And I got a couple of things I can show you guys. You probably saw me post it on, on Twitter. By the way, McElliott from Nomura came out with a note today talking about this, not about what we're talking about here, talking about how it's such a big we're at such a crucial, such a big spot right now, going into the Fed for the other side. Okay, I'm talking about what they may go into, right? For what they may come out of. All right, and that's what I'll post that McElliott write up again, so you guys could get an idea of how much the crowds have piled in to treasuries and all this stuff. All right. So McElliott was out with a note this morning talking about that and how drastic it is and what's capable of happening if it does pop. Marko Kolanovic from JP Morgan, you guys know him. He basically, he's calling for a crash of a lot of those crowded spots, including software, and a pile in to commodities and commodity related issues. All right, Marko Kolanovic from JP Morgan, yeah, he's probably the most reputable guy on that whole camp when it comes to this stuff. But I want to show you a couple of charts because nothing shows it better than some charts. Hold on, I got to grab them. I was looking for this earlier. Hold on. There it is. I posted it to private Twitter. Those of you for private Twitter in the room probably saw it already, but just in case you didn't. All right, and then we'll talk about names. All right. So here, this is the CTAs. Okay. So this is like what McElliott follows. They've been shorting crude oil and natural gas in size not seen since the 2015 EM crisis. So basically showing they're all in. You know, and that's what kind of like Kolanovic was talking about. Like, even if you don't like the energy backdrop right now, fundamentally, which he claims he doesn't even like it, you know, the positioning is what's important here, and it's what moves prices, right? We see that all the time. The story means nothing. Nothing means nothing anymore. Nothing means a thing. There's not a thing out there that's more important than positioning. I don't care what anybody tells me. Especially in these type of markets where liquidity is abysmal. You know, you see these moves all the time. When their positioning's on one side of the scale and they flip, you get these drastic moves in the other direction. And then back in the other direction, right? This has been something that has been stretched for longer than usual. Usually they don't last this long. And we talk about this a lot too, right? When sentiment is one-sided, right? That's the thing with positioning. Like, it doesn't matter until it matters. Right? Once there's a trigger that sets it off and things have to head in the other direction, that's where things get crazy, right? Like that whole gamma trade. So this is on oil and natural gas. And I want to show you another chart I'm looking at here. Well, if you're a member, you've probably seen it. If you're not a member, I don't know if I showed you guys this, but hold on, bear with me. I tried to get this before I started the webinar, so I don't have to do this. All right. I don't know if anybody's really talking about this right now. They may be. And then I'll take some questions. We'll go over some names and explain to you guys where I'm looking, or I've already, like I mentioned to you guys the last couple of weeks, I've already been at least getting my hands on stuff, because we know things happen quick in this game. All right, here it is. So this is the stock bond ratio. And so far, if you remember, we had a discussion about this. It is doing exactly what it's supposed to be doing. Okay. So this measures money going from stock to bonds, right? So in other words, when funds are going to bonds at an extreme, you're going to get a signal down here. Okay. So ultimately, there's a green line there. This is from Sentiment Trader. There's a green line there. Why? Because if everyone's plowing into bonds, that usually means they hate stocks, right? That comes around bottoms, as you can see. Bink, bink, bink. Right? When this line's up at the red line, what it signals is money moving from bonds to equities. Okay. Normally, right, in normal environment, if positioning was normal, you would take it as a caution signal if this line gets up to the red line, because what does it say? It tells us that money is at an extreme going into equities and ignoring bonds. Okay. But what happens is from time to time, when you get such a lopsided position like we've had for a long duration, okay, you will see this start to creep up to the red line. And then all of a sudden, it may even come on a short-term dip or for a couple of days, you see, bink, okay? And, a lot of people who are looking at the indicator and just looking at indicators broadly and don't know what's actually playing out, right, in the markets, they're going to take that as a bear signal. But in reality, what it's telling us is all that money that's been, all the institutional money, all the pile of money that's been piling into bonds and out of equities for such a long duration, boom, that bubble finally popped and institutional money coming back into the equity game. Okay, and you can see here, right there, right? You can see the big spike there. I wish I went back further, but it was almost the same thing, kind of like this, little dip, and then a big spike. And you can see how it's different, right? Look how much different it is than all the other spikes. All right, now there may be other indicators, other stuff out there that you can get a read like this from, right? I don't know of any, on a day-to-day basis, but that's what I'm looking out for now. That's going to be the ultimate, that's going to be the confirmation that we already know rotation's in play, right? So you can't say rotation because rotation can last a couple of months and then run out of steam. Major rotation. A whole new bull market in equities. In my opinion, that would be the confirmation that the fear bubble has popped in all the defensives and the bond markets and all that stuff, bond proxies, staples, utilities, and coming into equities. All right, and we haven't seen that. Okay, what we've been seeing now is a lot of hot money getting run over in software and stuff like that, high PE stuff. Okay, and little pullbacks, TLT, right, which is a measured ETF on bonds. This is nothing. This is a normal breather. That's no pop of a bubble. Utilities. Oh, little double top there for you technicians. But see, the thing is too, guys, it doesn't happen all in one day and come screaming at you. That's what I try to stress to you guys, and it's really difficult to keep your eye on the ball because it doesn't happen all in one shot where you see everything clearly. Right? Everything I'm telling you right now and everything you may get gassed up on, we could come in tomorrow and everything I'm stressing to you guys you should be focusing on looks like total shit. Looks like total shit. But it means nothing in the big picture, in the grand scheme of things. But because we like to, look at the daily gyrations, the up and downs, tick for tick, what the hell's going on in the markets on a day-to-day basis, you can see how that could easily become a problem and get in the way. So that's why you have to try to stay focused. And see, for me, like here's for me how it makes it a little easier for me to stay focused. Like when I'm seeing the flow in the right spots, like somebody's asking me about like spot right now, and spot may have a decent trade in it, but right now for this time at the spot we're in and what I'm telling you, which could turn into potentially a life-changing event in this game, right? I don't care about spot. Does that make sense? Like, I don't care. You know, I don't want to even think about what I care about spot. All right. As long as I'm seeing things play out like we need them to play out, and I'm talking about signals, right? As long as we're seeing flow and the positioning still coming together as it should, I got to keep my eye on the ball. I got to stay focused, and I got to pay attention on the group that I'm looking to leg into, to position into. You know, there are trades. There are trades every day out there. You don't need a bull market for trades, right? We talk about it all the time. You don't need a bull market to make money in trades. So for me, that's the easier way to not get wrapped up into too much else, to keep me focused on what I need to be focused on. All right, so now what I'm looking for, and those of you in the room private Twitter, I don't know if you even notice it because you guys may be focusing on other stuff, but any name that fits the bill or meets that rotation criteria, I'm making sure that I point it out to you guys. Whether it's a small sweep, a large sweep, it has earnings, it's irrelevant. Okay? You want to see every name that's catching sweeper activity that fits that rotation bill. Why? Because you may not have an interest in that name, but that name may be in a sector that you were looking to, catch, and you had some names you were interested in, and you start seeing action in some names you're not interested in the same group, and that could wake you up to start paying attention. Yeah, and that's the thing. Tree just hit it on the head. It's all about timing in this game, right? For you to be early in this game, it takes a lot of focus and work. It's so difficult now, more than ever, to be early in this game. Right? Famous last words of a lot of players in this game. Oh, I'm going to wait. They think they're going to time it perfectly. Right? They're so worried about downside or dull time, downtime, and they don't want to get involved. They don't want to waste their time, or they don't want to be down money for even a couple days if they had to. But for you to be early in this game, you have to be on top of things immediately. And in order to do that, you have to start watching with 3 eyeballs now, not 2, but 3 eyeballs, and be paying attention to every little sweeper that hits a rotation name. What sector? What are they doing? What do they buy? What may they buy next? That's another thing too. And you know what I'm talking about, Tree. You may see a name, you may see, oh, this one start to catch heat, right? Catch some sweeper activity, get some interest. Then another name in that same subsector catch an interest. Now there's another major name that didn't catch sweeper activity yet, didn't move much yet. But if everybody else in the group is, what do you think is going to happen to that one? And that's where edge is as far as timing. All right, so I think there's major rotation at play. Again, we were talking about, we weren't even talking much about commodities, right? We were talking like that may be the last and that may be the cherry on top. But the reason I'm talking about it now more so than we were initially is because we're starting to see signs from the things we follow on a day-to-day basis, right? And what do we say about earnings? You want to pay attention to earnings, right? We want to see the right type of price action. We want to see the right type of flow. We want to see them still have an interest in these names post earnings. And you look up and down right now in the whole cyclical camp, and you couldn't draw it up any better than how they've been acting. You couldn't draw it up any better. They sell it on earnings, they buy it right up. Stock has god-awful report out of earnings, conference call, doesn't give guidance for the next year and a half, disaster. Stock goes green. You know, the price action is telling you now is the time to start paying attention to these things. Again, just like the semis coming out of December. All right, just like the semis coming out of December. So what, like I told everybody who was on this webinar, not even the members only webinar, this webinar a couple of weeks ago, or any type of commodity name, cyclical name, bank name that you have an interest in, you have to start getting serious about it, and then you have to start owning some of it. All right. Now, some of the stuff already has moved. Okay. And that's why I stressed to you guys a couple of weeks ago that you probably want to get your hands on something just in case, you know, it moves against you, and now you're waiting for a pullback to own it. So if you have names that you're interested in, you want to at least grab something so you have something. If it comes in, let it come in. That's a good thing. You'll add to it. Okay. So now I'm basically sharing the same thing. I'm telling you guys about the same thing in the whole entire commodity space. Okay. But once again, here's the magic sauce. You have to make sure you have enough time to allow yourself to make decent money. Okay. If you want just a trade, then wait for some weakness and buy a spot, buy a CRM, flip it 2 days later, make a little bit of money. Okay. You'll have some winners, you'll have some losers. You're looking for the winners to offset the losers by an okay margin, and voila. That's how that game works. Okay, you don't have to rack your brain too much about anything if you're playing that game. You know, you want to focus more on buying into weakness, selling into strength, that sort of thing. It doesn't matter what sectors or what this or that. Everything bounces and everything, you know, everything goes up and down. All right, this is more for the stuff that a lot of you guys were complaining about wasn't around, and for good reason. I'm not saying you guys were whining. I was crying just as much as you. Yeah, John, that was the problem, you know? If you can't trade intraday, John, like you're saying, right? At least you're being honest about that. And you know, you can't be in front of a screen throughout the day. You shouldn't be trying to fool around with that stuff anyway in this type of market. Right? That's where you get frustrated, like we were talking about, Tree, with Trump tweets and these tape bombs and all this stuff that could drive you nuts. So if you're not okay with that game, the problem was there really wasn't anything out there on the position side with a favorable enough risk reward that you could get involved in. Okay, now there is. Okay, now there is. So that's the difference. You know, that's the difference. Like I explained to you guys in simple English on my side, right? As far as me and what I was doing. You guys remember, I was telling you, I wasn't buying anything for a swing with time. Why? Because I had no confidence that even if the stock went up over the next couple of weeks, that beyond that, you know, a month later would be even remotely close to where it was. The reward wasn't there. Why? Because all the action, all the stocks that were catching the decent action were up in a straight line, right? All the hot software groups, all the things we wanted to own were already scorched. So you're looking to buy dips and flip them. You don't want to hold on to time up at the top of a range. That's like, you know, we were complaining about for a while, right? Twilio, we know it's a monster, right? We know this thing, if you bought dips, you could have traded. But the problem is, if you're looking to build a position in Twilio over here, and you're going to go 6 months out, try to catch a nice winner, right? It may trend higher over the next month or so, But then what happens when this happens, and it's going to happen? You're done. So the risk reward is just not there, right? The risk reward is just not there. So now the stuff we're looking at and the stuff that's been catching action, right? Like we said initially, like with the cats, you're buying down here and you're going 6 months out, and you could see the potential reward there. You don't need to be a stock aficionado, right? The reward's there. Doesn't mean it's going to get it, but the reward is there. It's worth the risk. So it's worth positioning in these things. So that's the difference, John. That's the difference. You know, that's the difference. And maybe one day all those names that you guys like to play will set up again. But think about it. They've been going to new highs and setting up off every correction for years now. For years. Like even like this, like Microsoft, okay? Like I can't position in Microsoft up here. I don't care what contract they won, how their earnings are. I just can't do it. I can't do it. Okay? Because the stock already has had its move. You had ample opportunities to make money at Microsoft. Most of you, if not all of you, have. Now up here, this is what the likely price action is going to look like in Microsoft. Maybe not, but the odds of price action are probably like this, with the risk that there'd be some selling. Right? Like at Microsoft, everyone's going ooh and on off the quarter. You could have put Microsoft here with time, and you might have lost money if you're still in it, in the options. So listen, right now, especially if you like to play the option game the right way, okay? And what I mean by that is options play the right way. You put in what you're willing to lose, buy a basket if you have to, and you try to make a nice hit, okay? If that's your type of game, commodity plays right now, you're not going to find a better setup. Okay, they're cheap. Nobody wants the calls, right? There's no juice in them. And boy, if they ever get hot, and if there's any major rotation into those things, you're going to get paid. You're going to get paid. So that's the difference. Listen, anybody can size up, right? Any one of us can grab our coconuts and size up in Microsoft, roll the dice, and play it for $1 and make a nice hit. Is there an edge in that? Any one of us can do that, right? It's all a matter of having the coconuts to do it. The other stuff right now, the stuff we're talking about, that's where you can manage your risk and potentially make some real nice money. All right, so I'm just trying to paint the picture to you guys of what, what's actually taking place there and why I'm so focused there. All right, and that's on top of us trading all around it. You know what I mean? Damn well 99% of us in here are big enough degenerates. We're going to trade. We're going to sit in a basket with some time and do nothing else? I was already today on an intraday basis scalping energy names. You know what I mean, Trey? What are we going to just hold on to a basket of longer term holds and do nothing else? We're not going to do that. So there's going to be other stuff that come out of this rotation as it takes place. Shorter term swings and stuff like that. But this is just something where you don't have to pay attention to the noise on a day-to-day basis. You can piece into if you like, nice and easy, right? The more it hangs out and does nothing, the better it is. That's the way it should be looked at. Why? Because you'll get your hands on more. you'll get your hands on more. So you want to take it nice and easy. That's why I mentioned, grab a couple things. That word grabbing, Trey. Grab a couple things that you really like. You know what I mean? Grab at least one or two names that you really like, or ETFs, so you have it, and then the rest you could take nice and easy and let it come to you. Exactly. Or you could put on a basket and go to the racetrack, as Cash says. And you could trade around it nice and easy and all that stuff, but it's worth it now. It's worth it now. So that's where we got to be focused on it. And everything else, like the shorter term trades, the day trades, we're watching this stuff anyway. So we're going to be on top of that anyway, But I'll tell you one thing. I know for a fact, there are a ton of players out there that don't pay attention to any of this and are going to be scratching their head, not having a freaking clue of what's going on in this market. Don't have a clue what's going on, right? They're going to be wondering, this is what you're going to hear. You're going to hear comments. The market's at new highs and Shopify is at new lows. What kind of market is this? This is not a real rally. You know what I mean? You're going to hear those comments. That's what you're going to hear. But in reality, the same thing was going on. Okay, the same exact thing was going on for a long amount of time, just the other way. The market was rallying. All the stuff we're looking at now that we're interested was going to hell in a handbasket. And the Shopifys and the Procter and Gamble and bonds and all that stuff, they were rocking on a day-to-day basis. So it's the same thing. It's just cycles, right? That's the same thing that's taking place. So that's why it's important to pay attention to this stuff early enough. That's why. All right. And listen, the software names, as much as you, I want these things to come back and play. I'm scared right now. I don't know. I'm scared of them right now. The reason why I'm scared of them is because how many hands are in them? In other words, there is so much riffraff money in these things. It's out of control. It's out of control. And when there's a lot of riffraff money and they're used to making money in the same stocks, it's usually it takes some time and a lot more pain before these things have bottomed, and you can get by looking at them. I told you what Kalanovich said. He says the pain didn't even start in these things yet, which is kind of scary. Because he's saying that as far as the positioning, they barely got out of any. The exposure's still up there. So they scare me right now. I'm being honest with you. I really, I know they're crazy growth companies. They got crazy growth and stuff like that. But I've seen stuff like that, get hit over the head hard and stay dead for a while. It's totally normal. Look at like here, okay? And this, you're talking about a blue chip company, right? Cat. We quickly forget. I know I've used this line before with you guys, but I'm just planting the example again, okay? You see this? Right? If I didn't tell you what this was, you would have told me this was a software stock. Okay? And then see that now? So that's like buying software here, thinking the lows are in, and then here you get a rally, then back down again. You think rally new highs, back down again. So it can be around a while. So that's the difference. But you don't want to get too wrapped up in it because most of us like to trade these names anyhow, right? Short term, short term. And there's trades in them. You know, like CRM, which is actually a bigger name, still got caught up in the web. All right, you bought the lower end of that range of sweeper activity, you got a nice trade out of it. Anything more than that's tough. All right, so let's look at a couple of names. You want to try not to get too hung up on one name, okay, when it comes to this rotation play, because anything can happen in one name, right? The CEO can get hit by a bus, or you know what I mean? They can embezzle shit, they can cook the books. So anything can happen in one name. So that's why you may want to throw an ETF or a couple names, spread it out a little bit so you have a legitimate shot. But in the commodity space, energy, my problem is I been focusing on the energy names too much here. I need to start looking other places. Okay, so other commodities. All right, but you could go the ETF route, and that would take the thinking process out, right? So you buy some XOP calls, make sure you have enough time, right? You got XLE, those guys. OIH caught some action. That's cheaper, so it might be a little slower to move. But look at these things. They haven't done a thing yet. All right, and they've been tough. I agree, they've been tough. All right, but there's other subsectors besides energy and commodity land. All right, then you got names like this, which is also a tougher trade. A lot of hands involved, a lot of fun money involved, slower mover type thing. But we've seen some flow. Freeport out into next year. I think we saw some leaps there too. Alcoa. All right, or you can go down the ladder. A lot of them are cleaner movers too. So you can go, like I'll give you an example. Like oil. I know this name. I've played it many times off action. Can move. CNQ. Right. So like Tim, option trader knows diehard technicals. So he's looking at the technicals in this stuff, right? But at least he's looking. So that's what I'm saying. You look at technicals, you look at any of that stuff, you want to start paying attention to them now. You want to start paying attention to them now. Apache is another name. This thing hardly doesn't even have a pulse. Like, look at this. Doesn't have a pulse. These things have been warped. What was another name? These, these you're swinging for the fences, right? Rig. You want to use those as lottos. Yeah, that's the crazy thing, Cash. A lot of these names, Apache was a stud. That thing was a stud for so long. They've just been thrown out, guys. They've been thrown out. And listen, it's so hard. That's another discussion we had. Like U.S. Steel was a monster, catching $1 million sweeps back here. And now it can't even, they play weeklies in the damn thing. So the shop of art, exactly. The other thing about a lot of these names, you don't even need that major rotation to make money, if that's what you're looking for. So you can play it that way too. What I mean by that is these things, let's say you're playing with a little bit of time behind it, right? By accident, you get a squeeze on just a whiff of money rotating from one group to the other, right? And by accident, you get a number here. And then what you could do is, pull some of your initial cost out and let it go. If that's what you want to do. You want to play it a little more conservative. All right. But the one thing you're not looking to do here, okay, with what I'm talking about, you could do it on the side. You're not looking, like, for example, XOP. Okay. I bought some XOP. I'm not looking to sell the XOP at 24, 25 bucks. You understand? That's not why I'm buying it. Yeah, if I think it's time I could get a short-term move out of it and I'm junked up on that, I'll play something separate for a short-term move. I want some XOP so I don't have to pay attention to it on a day-to-day basis, and I could leave it alone, just like I did the PZZA. And I'm not, especially me, those of you who know me, I can hang on to it. That's my plan. I can hang on to it. Otherwise, I'm out of these things before I blink, if they pop. So that's why you want to try to go out with time. And sizing, it's all about your personality. A lot of people, I know me too, like when you have a decent size, when you got a little too much size, it makes it even that much more difficult to hang on to. Even when you're up, it makes it difficult, right? You're looking at the profit you have. Oh man, XOP, it's only up $3, but look what I'm up. I'm up some nice money right now. Yeah, so that's why it almost pays to take the stress out of it, size down, and you add things along the way. You add things along the way. You don't want the stress. You don't want the stress. You don't want the stress. Exactly. Right. That's why I love that fast game. I love that fast game. I love buying off, flushes when sentiment lights up for us and we sell the quick rip. But I like to also do this on the side. Like that's where my swings, like my positions, that's what they solely focus on. I don't like to be quick on my positions because now I'm just being, it's a little too much. I like the best of both worlds where I'm active, but at the same time, I see something with a quality risk reward with some time. Yeah. See, like I got lucky with the pizza, I got lucky with the pizza. Because me, Trey, if that was just a trade, forget it. I'd be out of it, not even close to where we are now. Not even close to where we are now. I did it with the GT, right? Like I would have sold that already. I still got decent profit. I converted into options. I would have been out of it. But because I'm looking for more, and that was my game plan, I'm leaving it alone, right? BHC. Even though I'm kind of itching to sell this thing, but I got April's. So stuff like that where you're down on it, you're not stressing out and blah, 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 but the quality risk rewards there, the flows there, it all lines up, and you don't need them all to be winners. You understand? That's the beauty of it, that, when you're trading actively, okay, over the short term, right? Like, what's your stop loss and your upside has got to at least offset that. You understand? If I'm buying BHC Aprils and I'm willing to let them go to zero, then my upside, I'm obviously looking for a lot more than I would on a short-term trade. And that's how I approach it. That's how I look at it. So the short-term profit tree, I don't even, I'm less inclined to sell it because it's not my target. If it was a loser, I can't play that way because I could be dead even, 4 winners, 4 losers, and take a bath. So I'm looking for more, and I have the time to catch it. So that's the game plan initially. And if you have a game plan, it makes it a little easier. All right. Other commodity names, we're looking at them all. Let me talk about some today. You want to get clever? There's a lot of names to get clever with. SWN, like my God, you want to talk about a dog? But I have by accident, a whiff of rotation, and this thing is trading north of 3. Right? It's just, by accident. All right. Today they were buying leaps. So if you're looking for options, you don't want to play the equity, you want to play options. I don't blame you. They're cheap enough. They're going out far enough for them to make a nice hit, right? They played Jan 2021. We can look back next spring, and they'll have 9 months left on those calls, and we could be in the spring. And what happens? This thing is trading at like $8, $9, $10. Is it that far fetched? Right? If we see rotation, we see that happen every year, all the time with some stuff. All right, so and we're at the point now that I think energy. Put it this way: I think energy. Any name that interests you, you could look at. The only thing I would recommend is waiting till after earnings to put on your full position. So in other words, I'll give you an example. You like Apache, right? I would, if you have to own it here because you're worried about upside off earnings, which is a possibility, right? You buy a little here, but make sure you leave some dry powder post earnings. You know, that's what I would do. So you could take advantage of it if there's some selling, because a lot of the news is bad in these things. That's why they're down there. But look what they did. Like, what was Rig's quarter? Anybody see the Rig quarter by any chance? What'd they do? It must have been a disaster. Must have been a disaster. You know, find a way to, and they found a way to go green. So that's what I'm saying. If you were interested in Rig, you wait, post earnings, you got weakness at the open today. That would have been your spot. You know what I mean? For an entry. And with some time, and you're good to go. But for all these things, this is another one a couple of us took a shot with for longer term, Chesapeake. Now, this is more in the lotto camp, even though they all look like this. But, you know, these are $1, $3 stocks. All right, but I would say anything energy related, you could probably start looking. In other words, even names that don't have flow, you know, if you have an interest in, you should already be looking at them, is what I'm saying. All right, and we'll see now if they come into some of the other commodity stuff. Like I know from my experience, like Alcoa, when they really get junked up in these aluminum plays, they buy Alcoa and then they buy the rest of the group with it. So they buy like a CENX, I think is the other symbol. You know, they all start catching flow together. All right, so like Alcoa, right? You don't like Alcoa, or it ran a little bit on you, and then you should be looking at like a CENX, right? And keeping an eye out for flow there. WMB, what? That's energy, right? Natural gas pipeline. Yep. Before I forget, there's another part of this rotation theme too, which has already moved. So you want kind of like a breather, some weakness, which I missed not one, but 2 entries on that I really wanted to own, is this. EEM, FXI and the boys. This EEM, they annihilated. They annihilated call side, this EEM. They hit it hard here. You guys remember? I admit 100% it was really difficult to buy here in the heart of all that noise, okay? But then you had a run, and then this breather, and then they hit it again. And I missed that entry. You know? And now you got another run out of it. So you probably want to see some sort of breather here and then start piecing in, all right? But you scroll back. Again, I'm no technician. You guys hear Tim talk about it all the time. But you see what's out at play. You know, it's a downtrend that's been going on for a while here, right? And there's your bottom. You know, so these things all look dangerous. They all look dangerous. All right, they all look dangerous. And the other thing too, which we got to do, Cash, they're going to have breathers, Cash. I'd be shocked, even at higher levels, if they come, they all have breathers. Where you can see right now, a lot of this stuff already is due for a breather. Like they may get tired. We want to pay attention to the breathers, because if they don't sell them, if they can't sell them, in other words, these things don't come in, that might be a telltale sign that there's just no sellers in these things, because nobody owns them. Nobody owns them. Nobody owns them. So that's what you want to pay attention to. A lot of these things are at levels, like even like a Caterpillar right now. You see where it is? Like off a couple day move higher here. If it stalls out, this is a weekly. Hold on. Even look at this. All right. What I'm trying to get at, the point I'm trying to make is, and we don't want it to, because like I said, we're not going to have enough. The trip up is not just going to be a straight line with sirens going off, screaming all aboard. There are going to be days, the market sells, or, Trump does something, and you're going to see weakness in these things. But what we should see is them buying weakness, constructive price action, higher lows. That's what we should see. All this stuff looks to me like the semis coming out of December. That's honestly, they all look like that to me. This is a weekly too. Same thing. Look at like LRCX. I remember we were talking about it early in the year. The same exact thing, right? This was the shop of that time. And then look. And now look at this freaking thing now. Unreal. So here we were in December. So you guys, just so you guys get an idea, okay? Looked hopeless, right? Then boom, rotation into semis, explosion, breather, another run, a little bigger breather. They bought it, and good night, Irene. But so this is the side I'm talking about here. There will be at least some dips like this is what I'm trying to get at. They don't just go to new highs in a straight line the first shot here like that. Yeah, and there's a lot of things. There's a lot of catalysts right now for the whole rotation trade. The biggest, you got worldwide stimulus from central banks all over the world. Worldwide stimulus. You have a lot of these groups and names that were priced for, forget recession, Armageddon, they were priced for. And the most important thing, nobody owns them. You understand? These aren't the fly-by-night Beyond Meats or even like a Roku. You're talking about major companies that if Caterpillar's in vogue, they have to show this name on their books. They have to have exposure to Caterpillar. You understand? You can't have Caterpillar with a bullish trend and you not own it as an institution. It's impossible. You have to have exposure to Cat and names like that. Like these are blue chip names. Some paid dividends. So that's the allure though, that nobody, the exposure in these things, nobody is in these things. And it's the biggest pain trade right now. The pain trade right now, right, that could hurt the public the most, that would sting the public the most, is major rotation into all this stuff that they don't own. And they got to chase. That's the pain trade, right? We know there's a ton of cash on the sidelines. We know they're in bonds like we've never seen before. We know they're chasing yield and dividends like we haven't seen in ages in utilities and stuff like that. The pain trade is anything tied to the trade war, anything economically sensitive, anything tied to a commodity. They don't own any of it. And that's where we gotta look. And like I said, a lot of people don't start paying attention to it till the charts look better, right? But there's a lot of in between that chart looking better. Like you here, Cash, remember this? UTX? Like, look how healthy that looks all of a sudden. Like, this is the poster child for the anti-trade war. I was using a line, like, if you wanted to short and play a short off the trade war, like if you would say, all right, give me a name that has the most exposure to a trade war, it would be UTX. Look at it. Look at it. Nuts. So same thing down here. A lot of people wait for the chart to look healthy. Now people are starting to take notice. But it'd be nice if you were in it with and leaving a runner of some sort. So that's what we're trying to do now. That's what we're trying to do. We're trying to get it paying attention earlier. Almost the same thing. Sure, you remember, like when markets sell off, right? You gotta try to block out the noise. Don't worry about nailing the bottom to a penny, right? As long as sentiment is showing us we should be paying attention, and then we're seeing signs from sweeper activity, that's when we have to start getting long stuff in corrections, right? So it's almost the same thing in the rotation trade that's already starting to play out. But that's where we were a couple of weeks ago, where you had to block out the noise and you got to start paying attention. Chemicals, they'll all participate. Look at that. That came storming back already nicely. That had earnings, right? I missed the earnings. It was up and faded a bit. I was tempted. There was like a couple little sweeps and I didn't pull the trigger. Look at that. See how quick it happened, Trey, from the bottom there? I remember we were just looking at it. Felt like what? A couple of weeks ago? And we were like, oh my God, this thing can't catch a bid. Looks a lot different now. Yeah, that's what we got screwed with earnings season, this taking effect during earnings season. But it's all right, because you're going to miss some, but you also have opportunities on some others that, maybe came down off earnings or were held down and stuff like that. Yeah, that whole sector, Tree, that whole sector will be right there in the rotation. That's what I mean. This is another group. We didn't even mention it today, chemicals. This is another group. I told you guys, keep an eye that hot group list I post on the day-to-day basis. Okay, it's not normal that they're always the green sectors, but they have been that way. But when I post that hot group list on like Twitter, look at those groups, and it has the top performing stock on that day to give you an idea. Ags would definitely fit in the bill as well. The question is on some of these groups, it's a matter of when. Some may take longer than others, but eventually the rotation will hit these guys as well. Like I remember Mosaic. I told you guys this. Look at this. Talk about going hot to cold. Look at this. Mosaic couldn't do a damn thing. You wouldn't buy Mosaic if somebody put a gun to your head. That's how dead the stock was for years. And all of a sudden, wasn't so dead anymore. We talk about shop. Mosaic was shop of that time. people would just trade Mosaic, Monsanto, and potash. Yeah, you see the home builders, what they look like? Remember how awful, Cash, you remember how awful these home builders look? Remember where most of us had DHI for a swing? We would love to have that back, no? Here's where I own DHI. Okay? That's where, no, I don't still have it. Of course not. Here's where I own DHI. Now, if I had the mentality I'm telling you right now, like what I'm looking to do, and it's a bigger portion of the market now. That was just home builders seeing rotation because of interest rates. But look how bad this thing was. Look at this. Disaster. Now it was new highs. Just like that. From the worst stock on the board to a machine. All right, I got my point across. All right, again, the last thing I just want to stress is that the important thing is to be able to block out the noise. It doesn't happen overnight, and this doesn't look like this in real time. You understand? It doesn't feel like this. It doesn't look like this. Charts a lot of times don't do it justice. You know what I mean? You look at this and it looks like easy money. It was anything but easy money because you were scared shitless that this thing was going to turn around and go to new lows each and every time there was a pullback. Even like right here. Oh, it's done. Ran out of gas. But in the back of your mind, you have to remember, everything we just discussed here of what happens when things get back in favor. And these periods of consolidation or these pulls, if you're focusing on the right stuff, what we're talking about today, you're looking at that as an opportunity. You're looking at that as an opportunity. So that's what we need to pay attention to now. Yeah, the financials, again, one of the first groups to, break out in the rotation. Because again, you're talking about major sector of the market that they have to own. Like, if financials are in play, you have to own JP Morgan. If you don't, you better go buy some. You got to get some. That's how they look at it. And that's why these things happen quick. So a lot of these things, it's happened quick. Berkshire Hathaway, we were talking about because you have some flow there, and this thing has been in massive consolidation. This is almost like a rotation ETF in a sense. That's the way to look at Berkshire. All those chemical names we were looking at that were a disaster and now coming back, he owns them all. So they have exposure to that whole rotation crowd, and you get the kicker of being a financial. The likelihood is this thing busts out. Well, it's just been consolidating. Did it here, and had some nice moves when it finally came out of it, right? So yeah, definitely worth a look, Tree, if you're interested. There's so much stuff out there, Tree. Okay, this is the total opposite of what we've been complaining about, Tree, for so long. We didn't have anything to look at. It was a select group of names that already have gone parabolic, basically. Now the whole rest of the market that we were ignoring is in play. So there's so many names now. You're gonna have names out to wazoo. Names out to wazoo to keep an eye at. Netflix, yeah, what's up, Mike? Oh, today's action? what happened was you had a sweep that front ran some block activity that came in after that. I would just, I mean, I would take a look at open interest tomorrow and see, if anything closed out or roll, that type of thing. It was some nice size though, some nice size. The I get a little too crazy with a block getting in the way, but when I see a sweep and then a block follows, a lot of those times those guys are just front running the size coming in. So but I would keep an eye on it if you're interested. It was big action. We'll take a look at open interest tomorrow too. Maybe get a clearer picture. But like a name like Netflix, this is where like I'm torn, because it was once crowded and has obviously been in bad shape for a lot longer than the rest. So I really don't know on these type of names, like where this fits. You had the big move, everybody in, crowded name, and then now, just working off all that bullishness. 210 you're looking for? It wouldn't shock me you see it, Mike. Because a lot of these names, if there's rotation, there's going to be some pressure on a lot of these growth names. So that's not too far-fetched over here. And they'll be back in favor again. You know that. So, and like I said, there's trades too. You know what I mean, Mike? Just because they're out of favor doesn't mean you can't trade them. You just got to be careful where you own them. You got to try to stick to buying blood and have them squeeze. The hedge fund chart looks fantastic. That's another plus we didn't discuss today. They have no exposure, Mike. You want to hear something crazy? You want to hear something nuts? Okay. Hedge funds, their overall exposure is basically flat now. They were net short, now they're flat, right? Their long exposure, you know where it is? Software, bonds, defensives. That's what they own to make up the only long part of their exposure. They're short, they've been short crude, they've been short commodities and all that stuff. So that's why, like I said, like guys like Marko Kolanovic is saying there's a high probability that these things can crash because of nobody came out of them yet, which is scary. You would think some money came out of it. You could see TLT is still catching inflows, by the way. There's still money coming into TLT. All right? Still money coming into it. There's no outflows there yet. So we'll see. Like I said, if it plays out the way we were talking about today, you're talking about craziness. Like I'm almost inclined to think it may weigh on the overall market initially. That's how big it is. That's how big it is. And that's kind of why I'm leaning more towards the commodity stuff right now, because I'm thinking if it does weigh on the markets, commodities can outperform. We can easily see them hang in there or even move higher. But you might see like some of the cyclical industrial names get taken down with the market if this bubble pops, because it's a lot of money involved. You get margin calls, you get all that stuff. So we'll see how it plays out. It's definitely going to be interesting to watch. And tomorrow you got one of the biggest triggers, right? The FOMC, potentially. I'll post that, McElliott. If you didn't see it, I'll post it on my regular Twitter. Keep an eye out for that. Interesting read on this whole Treasury crowded bubble and the ramifications if it does pop. So if you're interested, I'll post it on my Twitter as soon as I hang up here. All right, guys. Thanks for stopping by. We'll chat again. Good luck the rest of the week. Happy Fed Day, mañana. So we got some excitement, some action. Apple tomorrow, action-packed day tomorrow. So get some rest tonight. You'll need it. Be good, everybody.